Donald Trump has announced a new set of tariffs on imports from Canada, Mexico, and China, sparking immediate reactions from these countries and raising concerns about global economic stability. While Trump argues that these tariffs will protect American industries and jobs, the move has triggered fears of retaliation and a potential trade war, which could have far-reaching consequences beyond just these three nations. Canada, one of the United States' closest trading partners, has criticized the decision, calling it short-sighted and damaging. The Canadian government has indicated that it may introduce countermeasures to protect its own economy, a move that could directly impact US exports. Mexico has also expressed concerns, warning that it will retaliate if these tariffs negatively affect its industries. Mexico is a major trading partner of the United States, especially in the automobile and agriculture sectors, and any disruption in trade could have consequences for both sides. Let's talk about China. China, having already been in a trade conflict with the United States during Trump's first term, is unlikely to remain passive. The Chinese government has hinted at the possibility of counter tariffs targeting key American industries such as agriculture, technology, and manufacturing. Given China's economic influence, its response could further destabilize global markets. Let's talk about global repercussions and the risk of a domino effect. The implications of these tariffs are not confined to the countries directly involved. Trade restrictions have a tendency to create a domino effect where one set of tariffs leads to retaliatory measures, escalating tensions across multiple economies. The World Bank has already warned that such trade policies could slow down global growth and disrupt supply chains that rely on stable and predictable trade relations. Tariffs make it more expensive for businesses to import goods, which in turn forces them to raise prices on finished products. This increased costs for consumers worldwide, making everything from electronics to essential commodities more expensive. It also discourages investment as businesses become hesitant to expand or hire more workers in an unpredictable economic environment. How could that bring an impact on the US economy? While Trump's decision is framed as a move to protect American businesses, history suggests that such policies often have unintended consequences. Tariffs increase the cost of imported goods. That means higher prices for American consumers. As businesses face rising costs, they pass them down to customers, contributing to higher inflation and a more expensive cost of living. The United States has seen this before. In 1930, the Smoot-Hawley Tariff Act raised import tariffs by an average of 20%, leading to a global trade war that exacerbated the effects of Great Depression. More recent studies highlight similar risks. The Peterson Institute for International Economics has estimated that a 10% universal tariff increase, coupled with retaliations from trade partners, could reduce US economic growth by 1 percentage point annually for 2 years. This means that while the intended goal is to strengthen the American economy, the outcome could be reduced growth, job losses, and a weaker financial outlook, potentially a trade war that no one can win. The introduction of new tariffs is not just an economic policy decision, it is a move that could reshape global trade relations. While protectionist measures might seem beneficial in the short term, history has shown that they often lead to economic downturns rather than recovery. As global markets brace for potential retaliation and uncertainty, the key question remains: will these tariffs truly strengthen the United States economy, or will they trigger yet another trade crisis? The coming weeks will reveal how other nations choose to respond and whether this move will escalate into a full-blown trade war, one that may end up harming America just as much as its trade partners.